Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope everybody's having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin had just broken up above 12,400, guys. I told you that it looked to me like it was going to come up and at least test this $13,000 zone, guys, this $13,000 resistance area. Of course, we did do that, guys, and then Bitcoin found resistance there for basically 16 hours straight. And this is why I told you yesterday, guys, if you were bullish on this thing, if you were looking for this thing to break up above or to break up and test this $13,800 zone, this is why I said that we needed to wait for that. I was very comfortable saying that it looked like it was going to come up and at least test 13, but I said we needed to wait for that decisive break above 13,000, really above $12,950 before you go long and look and start targeting 13,800, guys. That, again, not financial advice, not a financial advisor. You always do what you want to. That was just my opinion and what I was doing. And this is why, guys. This is why you wait for that confirmation. This was very, very clearly a very, very strong area of resistance, guys. Of course, you had plenty of opportunity to get out if you were in a position here. I'm sure you had that uncomfortable feeling, guys. We had literally 4 candles in a row, 16 hours of wicking right at the top of the exact same area at about at about $13,170. Basically 4 wicks in a row, stopping out right there. And then of course we had that breakdown. But you had plenty of warning, and if that wasn't enough, of course we look at our 4-hour MACD, both showing bearish divergence on the MACD as well as the RSI. Anytime you see the MACD and the RSI lining up like that, guys, typically you can expect that breakdown. So yeah, you did have plenty of warning, but even if you weren't watching that, guys, just following that simple rule of waiting for a decisive break before you end up, before you go in heavy on anything, would have saved you here. We never did have that decisive break above 12,950. We had a 4-hour close above there, but we did not have a 4-hour open and close, and that's what we mean by decisive break, a 4-hour open and close. Now, sometimes we're looking at the daily, but regardless, a decisive break, depending on if we're looking at the 4-hour or the daily candle, we're waiting for the candle to both open and close before we can declare that a decisive break. Now, while this thing did break down on volume, guys, so of course this is to be respected, this drop is to be respected, we are seeing a lot of structure in the market. What I mean by that, if we go swing low, swing high of this latest structure here, we can see that price was finding initial support right on top of the 236. Then it bounced down and wicked right at the 382, and then of course we're bouncing down, not quite hitting the 50 just yet. And we'll have to wait and see. It actually does look like it may want to put in a temporary bottom here. We'll have to wait and see kind of how this ends up playing out. I'm going to be looking for a 4-hour open and close below about 11,800. If we do get a 4-hour open and close below 11,800, even if we get a 4-hour close below 11,800, I will start to believe that we're very likely going to come back down here and test about 11,500 to about 11,450. And what I'm liking about this is, guys, we can see that our visual supports are lining up very nicely with our fib levels. And anytime you see that, again, guys, that does signal a lot of structure in the market. And we can even see right below that, the next major visual support would be sitting right down here between about 11,000 and 11,100. And where does that golden ratio lie? Where is that 618 fib level? Right there at about $11,020. So again, we are seeing a lot of structure in this market, which does typically bode well if you're looking for scalp trades, looking for swing trades. Typically, that does bode well for those if you're trying to play each one of these bounces on the way down, or even a reversal, guys. But in this case, you'd be playing the bounces on the way down. So again, are seeing a lot of structure in this market, which again does bode well for the overall health of the market. And coming out, looking at the daily, guys, we can see that the daily. This is why I was making you guys yesterday so very, very aware of this area of resistance. Clearly, we had what was an obvious area of visual resistance with our daily candles back here on June the 26th, finding resistance. And rejecting very, very, very hard off of that area. And then, of course, we retraced about 30%, somewhere thereabouts. But on the way back up, we could very, very clearly see that not only did we have a potential area for a double top here, which, whether or not you believe in double tops and double bottoms is pointless. It was a clear area of resistance. But we also had literally the upper Bollinger Band quite literally just drawing itself right on top of the area of our known area of resistance, and very rarely do you see that. So of course this is a very, very relevant zone. If we can get above this zone, if we can decisively break above this zone, and really, I know I've said a 4-hour open and close, but I mean a more appropriate would be a daily open and close above this 12,950, 12,940, depending on how you want to draw it. Really, that would be the more appropriate thing to do. But as I said, guys, I would probably front run it if we just got a 4-hour open and close above about 12,950. That being said, guys, the bulls are still very, very much in this fight. Obviously, the overall trend is still very bullish, as well as even short term, even though we are having a nice little correction here, and nice is relative, even though we are having a little bit of a correction here, we have not even closed the daily below or really traded for very long below the 8-day EMA here. So again, we're still trading above the 8-day EMA. We're still well above the 21-day EMA. So again, overall, the chart is still extremely bullish overall is my only point here. Now, could that change? Yes. If we do break below the 21-day EMA, and especially if we get a decisive break below the 21-day EMA, yes, my outlook will change substantially. But until that does happen, guys, again, the trend does look bullish. Let's go out here to the weekly. Weekly, same way, guys. I mean, yes, the weekly actually represents a little bit better what's going on. We have a pretty epic battle right now between bulls and bears, coming off this shooting star bearish candle back on June the 24th. Of course, we saw this. We didn't see any follow through with that on the following week, and then of course we're looking at this week now. We do have this nice long wick to the upside, suggesting the bears are trying their best to turn this thing back around and to hopefully follow through on that shooting star in their mind. So it really is a bit of an epic battle between the bulls and the bears, but there's no question about it, guys. The bulls overall are winning this battle. There's just no question. Now we'd have to actually break down below the close of last week's candle. If we did do that, then of course, then I'm going to start looking at targets down to the downside. But until we do take out the close of last week's candle, and again, that's going to be around 11,450, 11,500, somewhere thereabouts. Again, the trend is still bullish. Pulling all the way out on the weekly, and again, I know I've shown you guys this before, but I think it bears repeating, especially for possibly new viewers. But just to make sure I'm very, very clear, guys, we can see that I didn't just pick that this $13,800 hit that we basically not reversed on, but basically topped out here briefly on June the 24th. This was not just an arbitrary hit, guys. This was a very technical hit right off what was an obvious area of resistance back here in December of 2017, and then support in 2017, and then that support turned into resistance before we had that massive breakdown. And that literally happened almost to the dollar of where that support resistance reversal happened back in 2017, beginning of 2018, versus this rejection right here on June the 24th. So this is an extremely relevant zone that we do have to get above, as well as the fact that if we just pull our swing high to our swing low, and again, I know I've pointed this out before, please indulge me here just briefly, we can see that the golden ratio sits there right there. That 618 is at about $13,390 to be exactly precise. But of course, the golden pocket sits up there all the way up to about 14,000. So between that golden pocket between the 618 and that 65 fib level is extremely relevant. And this is the only reason that, and I know I've talked about this ad nauseum in the past. I'm not going to go too much into it now, but this is I know there are some people out there that don't believe that the bottom is in. They believe this is a bear market rally, and of course they point to all kinds of reasons, but the best argument they have for this being a bear market rally is the fact that we have not yet taken this area out, taken out the golden pocket, and we rejected hard off of it. So the bulls have got to take out this golden pocket to confirm this bull market. I think that'll put to bed any bears. Now, don't get me wrong. I do believe the bottom is in. I am still bullish. I do believe that the bull market has started. That being said, that's my bias. Now, technical analysis does not completely confirm that until we do take out this golden pocket. Once that does happen, I don't believe the bears have a leg to stand on. Until that does happen, they do have somewhat of a valid argument. Now, again, I believe that the bullish argument far outweighs the bearish argument, but their argument still does have some validity until we do take this area out. All right, pulling back in here to the daily chart, guys, we can see that, of course, we'd hit, that come down and hit 11.5? Close, pretty close, 11,550-ish, so very, very, very close. Let's go ahead and, I'm curious. Let me pull our fib extension. Yeah, man, that was almost to the dollar, hitting right there off that 382. So again, we are seeing a whole lot of structure in this market here, guys. So again, if this does break down, if this 382 does break down, this would suggest a drop back down to about 11,000, 11,100, 11,000 to 11,100, that $100 range. And of course, that is a visually looking at this, guys, we can see that is a visual support as well. We can see coming back here, this acted as support, 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 support turned into resistance here, back to support, back to resistance. So I'm going to go ahead and mark that out. That is a very relevant zone right between 11,000 and 11,100. And the fact that we do have our 50 coinciding very, very nicely with that does mean that if we do break down 11,500, I do think our next stop is going to be somewhere around 11,050 to 11,100, somewhere in that neighborhood. And again, that is only if we take out that 11,500, guys. I'm not telling you that it's going down there immediately. Not saying that at all. All right, looking at this ascending support line here from our prior wedge, it does look like price is actually respecting that. So that is, again, that is interesting. So yeah, if 11.5 does break down, yeah, very likely a very quick drop down here to about 11,050-ish, somewhere thereabouts to the upside. Zooming in on the 4-hour, yeah, to the upside, I really need to see a 4-hour open and close at least above $12,000, guys, before the, before I'll start thinking of looking at targets up here about 12,400-ish, somewhere thereabouts, to shift my bias back in favor of coming back up and testing this area right around 13,000. We're going to have to start trading again above about 12,400-ish, somewhere thereabouts. Let me just see something very quickly. Yeah, actually, sorry. And let me see if this lines up. No, that's not what I was doing. All right, disregard. I had a theory, but it didn't pan out, so disregard, guys. All right, so coming out, looking at the larger picture here, guys, let's go ahead and swing out to the daily. And let's grab this, let's grab our fib again. Let's go from our swing low to our swing high. Okay, and just looking at this visually, you can see the price came down here. We bounced basically right about at the 50, somewhere thereabouts, guys. That's where we found support. Now, of course, we wicked all the way down here. I'm looking at the bodies here. Of course, we wicked all the way down here, rejected very, very hard right inside that golden pocket. Once again, is that any coincidence? Nope, it's not. That golden pocket is a beautiful thing, guys. So again, rejecting right inside that golden pocket, getting a very nice bounce to the upside off that zone, guys. But visually, we can see that major support is sitting right around 10,650 to 10,700, guys. We can see visually that is a decent area of support, and that is confirmed with our 50 fib level, which sits at about 10,680-ish, somewhere thereabouts, guys, depending on if I'm drawing the wick or the body. But it's going to be about 10,680. So if my point is, that's kind of my line in the sand. If we do break down below 10,000, let's call it 10,650, if we do break below that, I think it's going to be a very quick drop to come down and test that $10,000 area. But on the second time around, testing this 618 on the second time around, oftentimes it'll fail, and of course that would be the next major drop down to about at least 9,400, but more likely we'd be looking at a drop down to about 8,800, 8,900, which would be our next major fib level at the 786 sitting down here. So that's I'm not telling you that I think that it's going to happen. I'm giving you an idea of what to look for if this, then that. That's how you can plan. And basically, guys, that's all trading in, is making sure you have a plan. So this hopefully gives you a strategy that if we do end up breaking down here, you'll know what to do and you'll have a plan and you'll be able to execute that plan, unlike most people who'll just be panic selling and not having a clue what to do. But again, we're nowhere near there yet, guys. I'm not trying to spread any FUD. We're still holding up this trend line here. We're still above and having a nice bounce off our $11,500 zone. We come over here, we look at our moving averages exponential. We're still trading above the 8-day EMA, nowhere near the 21-day EMA, guys. And looking at the weekly, we have yet to even come down and test the 8 weekly EMA. So again, guys, overall, big picture is bullish. Without question, big picture is bullish. Now, to change that bias, we would actually have to drop down below, again, and this confirms it, we would actually have to drop down below that $10,650 zone, which coincidentally, or not so coincidentally, would put us just below the close of this extremely bearish candle, this shooting star that we saw back on June the 24th. But again, guys, we're nowhere near there yet. Checking daily volume sitting at 32.3 billion. So definitely volume is ticking up very well. Let's check longs and shorts. Looking at longs, longs are, longs are decently stacked actually. Yeah, longs compared to shorts, we got a fairly decent spread between longs and shorts, and that's probably one of the even more bearish than this retracement here. It's actually a little bit more bearish. But again, until we do break down below 11,500, until we do take out at least that 8-day EMA, if not the 21-day EMA, guys. I mean, if all these things remain intact, again, the overall trend is bullish. So until that does change, you don't have to go with the trend, but you don't have any reason to be terribly bearish at the time. Now, the fact that we do have a whole lot of volume means that this price could move fairly significantly at any point in time. So that's certainly something you want to be aware of. Clearly, we just hit major area of resistance, rejected pretty hard off of that, guys. So again, I think the more conservative play is to just kind of sit back on your hands. Sometimes the most difficult thing to do as a trader is to do nothing. And I know that's frustrating because as a trader, you want to trade, you want to do something, you feel like you need to do something, and that's not always the case, guys. You don't always need to do something. So sometimes the best thing to do is just to sit back and wait for a trade to come to you. Don't force it. So how am I playing this, guys, to wrap this all up in a bow? I'm basically, if this does come back down and test that 11,500, 11,400, I probably won't play that, guys. This would have been the bounce to play, and it's already happened, so I'm probably not going to touch that, guys. I will very likely try to scalp this $11,000 to $11,100 zone. That area does look like we'll see a decent bounce off of that, as well. If and when that does, probably at least a $200-300 bounce would be my guess. Don't get greedy, though. If that does break down, guys, I do think, again, we're going to get a nice little bounce off of that $10,650 zone as well. So if this does end up breaking down, guys, yes, I'll play each support on the way down. But again, not getting greedy, guys. Very, very small scalp trades in and out very, very quickly. Again, not financial advice. You do what you want to do. Just kind of giving you an idea of what I'm thinking. And that could change depending on how we end up breaking down. Do we break down on volume? How does it look? Is it a complete drop? Or are we breaking down with some structure? So that could change. To the upside here, of course, I need to see us take out at least this $12,000 zone. If we do take out $12,000 decisively, a 4-hour open and close above that, and if it isn't just a nice little bounce up here, then I may start considering looking into a very quick scalp or day up to about 12,400, somewhere thereabouts, guys. We need to get above 12,400 decisively before I'm going to start to get very interested in going long again in Bitcoin again, and before I'm going to start eyeballing that $13,000 range and possibly taking out that $13,000 range, that really $12,950 zone that we've been trying to take out for quite some time now, decisively take out for quite some time now. So, all right, guys, I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. I apologize I'm not getting to your comments today. I've got to run. I'm running out to dinner here, but I will get to them either probably not later on tonight, but more likely tomorrow. Until then, guys, trade safe. Take care of yourselves. This is working. Oh, by the way, please remember to like, subscribe, and if you do want to get notifications of videos, hit that notification bell in the bottom right-hand corner. Until next time, guys, please trade safe. Take care of yourselves. This is working. Sign it out.